Hello traders, today is the 2nd of January 2014 and happy a new year to you all. The title of this video is How to Day Trade, Tips and Tricks, Part 2. Alright, the second part is completely independent from the first part, so you do not have to watch the first part before watching the second part. These are two independent videos. All right, in this second part we will be looking at day trading setups on the yearly charts and a different day trading strategy, trading around the opening price, the closing price, the high and the low of the yearly chart. Though we are using a yearly chart, if your software does not allow you to see the yearly chart, you can implement the same strategy on the monthly chart, quarterly chart, and weekly chart. So do not worry, stay with us if you do not have the yearly chart. Okay? Let's get started. This is about how to day trade, tips and tricks, part 2. We're going to look at 12 stocks. Okay, within 30 minutes, we'll look at 12 stocks, showing traders different day trading strategy, okay, if you are trading stocks that are listed on the Dow 30. As I explained to you before in the first part of the video, when we see a setup, we must validate the setup on the higher time frames, all right? Though we are trading the individual financial instrument, we must always pay attention to the S&P 500, which represents the market itself, talking about the trading triangle. This is how the professional are day trading, all right? The first stock is Coca-Cola stock. We are on the yearly chart, EPIC Kilo Oscar KO, listed on the Dow 30. Today, the setup that we are looking at is the closing price of 2013. So the strategy is very simple. Priority to bullish signal above the closing price of the year 2013 and priority to bearish signal below the closing price of 2013. Now, as you can see, the market did open here. So the red horizontal line here on this yearly chart, this is our key level that we are watching today. So this is a setup, just watching a key resistance level, either the closing price, the opening price, the high and the low of the yearly chart candle, or you apply it for the weekly chart, you can apply it for the monthly chart, you can apply it for the quarterly chart. It doesn't matter, that's why you can stay with that. So here we are. So from here, this is my setup. Because I cannot see any higher time frame than the yearly chart, there's nothing else I can do to validate this setup. Another thing I can do is to check the economy news that are connecting to Coca-Cola. If you are day trading, you want to know the economy news, go to Google Finance, go to Yahoo Finance to check the economy news of the financial instrument that you are day trading, all right? So you can know exactly what is taking place. It's not that you are trading economy news itself, but you want to know what is happening, all right? So we have our red horizontal line there, so I can use a multiple time frame trading method, okay, to take the trade. Now I'm going to the 3-minute chart to zoom into it to see the activities, the trading activities around that red horizontal line, which is a key level. As you can see, here we are. And today, can you see? January 2nd, 2014. So the market did open here, near that level, and quickly price D below the moving average 30. Right here. They sold it on the edge. Aggressive traders sold it straight away on the edge. And this is a tricky one because the price runs so fast. If you are not aggressive trader, you won't be able to take this trade unless you take a tiny risk here, which means you sell it. As you see here, it's a bit tricky. But the price it will be nicer here. Let me show you. It will be nicer, if it's running fast, it will be nicer to run a little bit near the moving average 30 and then start coming down after it You rally up to the moving average 30, and then one or two candles close down, and then you can sell, placing your stop loss just behind the moving average 30 because it's now bearish. Another thing trader can do, you can see here, there was a high. In fact, there was a mini top here. Okay. Oops. I'm moving my line a little bit. There was, you see this top on the 3-minute chart today, and we have the third top here. Oops. That's it. This is the third top, and you can see here, double top. It ran down, and now, so it's not easy to enter this trade because you are looking for a low risk entry point. So you may be thinking to sell it here, which is not a good place because you don't want to sell it above the moving average 30 like this. You prefer to sell it down. So the only option is this green candle. Went too fast. All right, so only aggressive traders will take this trade, but this is a sell signal, priority to bear signal below the closing price of 2013. That's what they use today here. A top, a top, a top, and they sold it down. All right, the next financial instrument that we're going to look at, okay, very fast. Again, we'll go to the yearly chart for Chevron Corporation, Epic Charlie Victor X-ray. As I explained to traders, one can apply this strategy on a monthly chart, quarterly chart, and weekly chart. Again, today we are watching the closing price because the market is opening near the closing price. A new year is beginning. So next year, you can wait, all right? Not only wait until next year, you can apply it on a monthly chart, quarterly chart. So end of each quarter, a new quarter has begun. You can draw the high, the low, okay, the median line, okay, the opening price and the closing price of the candle, and then you monitor the activity where the price is, like you see here, the price near the closing price of 2013 for Chevron. We are watching the red horizontal line. I have also drawn the pitchfork tool. You see the brown pitchfork tool. So for swing trading purposes, if you receive a sell signal using the TSCWSY008, any price holding it down, we can watch okay, the opening price level and up to this the median line of the pitchfork tool. But if the price goes above, okay, the red horizontal line, priority to bullish signal, but one must watch the edge of the upper bullish band because sometimes the price may go above the red line. People say breakout, but there's a resistance not too far away, which is the edge of the upper, the edge of the pitchfork tool in this case on this yearly chart. You see now? So I can leave this line, this pitchfork tool on my chart, and I can switch on to the lower time frame looking for this line. And if the price is approaching the edge of the pitchfork tool, if I was buying above the red horizontal line, I'll quickly take my buy profit. If they are selling, I will sell it together with them on the edge, knowing that it's a risky trade when I'm selling above the red horizontal line. All right? You see now? If you find a support above the red horizontal line, one must also watch the high of 2013. So the high of 2013 is $127.83. The closing price was at okay, $124.91. So the key level that we are watching on 124.91. That's the horizontal line. If it's going up, one must watch also the high of 2013. So let's go now to the, because we have 12 stocks to analyze. I'm going to go a little bit faster now. Okay. So I'm looking for my red line that I've drawn for the yearly chart. Is that it? No, that's the, I couldn't see now on my 3-minute chart. That's, you see this line here? This is my pitchfork tool. You see the brown line that I've drawn for the yearly chart? That's my pitchfork tool. How traders were selling on the edge before, but today, this is the today's session here. All right, it's today's section here, only this section here. So I'm going to go to the 5-minute chart. Hopefully, I will see my red line. Okay, it's not showing on my chart. If I can't see here, I need to go to the higher time frames and I will definitely see it, okay? I'm going to go directly to the, now you see, now I'm on the hourly chart. This is my red line that I've drawn from the yearly chart. You can see here. Here, you see. All right. So this is today. All right. From here, couldn't go to it. Couldn't go to it. So it just went down straight away. Start going down straight away. All right. So what is happening here? Why traders are selling? We can draw our trend lines like this. All right. Carefully. This. Okay. All right, this point and this point allow me to draw my trend line. The price D below the trend line, the bullish trend line. I'll color it now on the hourly chart. All right, D below, okay, the red trend line. Now it displays a lower top here. It's bearish. Lower top, traders are selling it now. But where we are now, price now at a support level on this hourly chart. All right, but priority to sell signal below the red line that we have drawn on the yearly chart. But if you are selling, you want to monitor the support level as the price holding it down. All right, if it breaks below this blue horizontal line and the final resistance below it, what we will do, we will use okay, the projection of the top. So I'm going to use a very conservative measurement, from here to the red horizontal line, and if it D below it, we will set the first target there. All right, this is a day trading for day trading purposes, bringing us to this support level. And if that support level is also kaputt, so to speak a bit of German, all right, we will bring it. The next target, okay, will be somewhere here, all right, and so on, and so on. Greedy day trading. All right, you see now? So from the yearly chart, we see that this red horizontal line is a key level, all right? And then we switch now to the hourly chart. We have noticed that the common trend line here is broken, and the price has displayed lower high, and it goes below the moving average 30. We'll look for opportunity to sell as traded D today. And now the price at a support level. One should grab some profit as a day trader. All right. The next financial instrument is the EPIC is Mike, triple M. All right. 3M company. All right. Here it is. I'm going to go again to the, you can see on the hourly chart, it's now below the moving average 30. I'm going to go to the yearly chart. On the yearly chart, the level that we are watching today is the red horizontal line. So the strategy is very simple. Draw the high, the low, the median line, the opening, and the closing. If the price near the high will be our warning line. Here, you see it close near the high. The price did open today. A new candle is opening today, which is the yearly chart. If you are on a monthly chart, monthly candle is closed. We can do exactly the same thing. A new month has begun. Weekly candle is closed. The new week has begun. We can do exactly the same thing. Here I'm using a yearly chart as a setup, and I'm looking for opportunity for day trading. So priority to bullish signal above the red horizontal line, and priority to bearish signal below the red horizontal line. So if the market is bearish, all right, S&P 500 is bearish, and the price goes above the red horizontal line, I will decide not to trade it because the market is bullish, but this stock is the market is bearish. If the market is bearish and the stock, another stock is bullish, I would prefer to trade stocks that are also bearish. This is very important. So you need to understand, because sometimes traders apply one strategy and they forget everything else, and then they learn a new strategy and then they forget everything else. No. With trading, you need to be a multi-talented trader, all right? Everything else work together, all right? They all work together. If you see one strategy, all right, denying another strategy, be careful, all right? That's why the market stable data, all right, the market principle allow traders to make consistent winning trade, because they don't fight the market, and they flow with the market. That's how we design a TSCW24. A TSCW24 and a TSCWSY0A do not fight the market. Very simple. Very simple. So here we are. Okay, the discipline, that's what we are looking for, and the experience, okay? Discipline and experience, steadily, all right? Steadily. Learning it, test it, open a demo account, test it. If day trading is not for you, okay, check swing trading. Swing trading suits your trading style. Okay, are you trading stock? Is stock suitable for you? Is it Forex? Is Forex suitable for you? Is it ETF? Is it indices? Okay, go around. All right, don't trade the same thing, or don't take some crazy stock that stay in one place that no one is trading. Is it too volatile for you? Okay, all right. Is it too costly for you? All right, look for something that is cheaper for you to trade. All right, so and so on and so on, okay? So this is it. So let's go to the 3-minute chart again. The 3-minute chart, just to zoom into it, I can use 2-minute chart, I can use 5 minutes. That's just my obsession with a 3-minute chart, all right? So here we are. On a 3-minute chart, I'm looking for my red line. Hopefully we'll see here. I couldn't see on my 3-minute chart the red line that I want to watch. I'm going directly to the 10-minute chart. Hopefully I will see it. If I can't see it, I'll go to another time frame and so on. Here again on the 10-minute chart, I couldn't see it, my red horizontal line. So I'm going directly to the hourly chart. Here it is on the hourly chart. Now it's gone. Okay. Here, you see? Here. So in fact, today you see the price gaps down. Okay. It gapped down to the green trail line here. Okay. Down. They brought it down straight away below the moving average 30. So now, because we say priority to bearish signal below, if we want to sell at this, because it gaps down like this, some traders have a good opportunity here while the price was coming near. So you see gap down, boom, 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 down to the support. If you want to say, you want to roll it back near the moving average 30 like this, which it did earlier on, you see here. It went a little bit up here, isn't it? See, close here, I see. Near the move 30, and then you sell it down. But there's a support here now. Now, the way it is now is tricky to sell it if you want to sell. Because though we say priority to sell signal, doesn't mean that we sell anyhow. We are looking for, okay, a valid sell signal on the edge where we have a low risk trade, which we edge of for the moving of a 30. But there is a support below here. So we will prefer something like this. Bring it down below the support. And then if it's bearish, doesn't mean sell. Some trader will go down and place a trade to sell. That's crazy. Don't do that. All right? All right? If you receive a sell signal here, that will be better, please. So roll it down below and push it back. Okay? And retest the moving at 30 and then go back below. That will be nice. Following the market itself. Do not fight the market. You want to align your day trading strategy with the S&P 500. Human beings have spent most of their time fighting themselves, fighting their mother, fighting their uncle, fighting their wife, fighting their friend, fighting everything. It's time to stop the fight. All right? Take it from me. Okay? This is to breathe in and breathe out a little bit. Though I'm talking like this, I'm very, very serious. Let's move on. Next financial instrument. IBM, we're going to go again to the yearly chart, and we are looking for a setup. Okay, we are looking for a setup. So this is on the yearly chart. You see my pitchfork tool joining this point. 3 points we need. 1, 2, 3. Only 3 points to draw the pitchfork tool. This point, and this point. Price went up and then pull back. You went up to this level and then pull back like this. We have 3.1, 2, 3. We draw the pitchfork tool. Now, as you can see, the warning line that we are watching today for our setup, this is the closing price for this IBM, International Business Machines Corporation. All right. So we have the price when you see when above the median line of the pitchfork tool for 2 years, and now this year 2013 it closed below it. Now we have 2014 starting here, and the price did open near the closing price of 2013 in the bearish zone below the median line of 2013 and also below the closing price of 2013. We'll give priority to sell signal. In this scenario, we'll say priority to sell signal below the red horizontal line at the level of $186.75, and priority to bullish signal above $186.75. If one is bullish, it's a bit crazy to be bullish like this. You see the candles, doji, somebody sold it down, it closed it here in 2012. Now, it went up and went above the high of 2012, but it sold it back down, and it closed below the opening price of 2012. I will not be bullish with this stock until it goes back at least above, okay, the red horizontal line. But still, it's tricky to be bullish in this scenario, analyzing these two candlestick patterns. 1 second, please, just to know something down for myself. That's it. So here we are. So priority to bullish signal above, a priority to bullish bearish signal below. But even if you are bullish, it's not very exciting for this stock to be bullish like this until it goes above the opening price of 2013 at least. All right. So for today, for day trading purposes, this is our setup. Let's go to the 3-minute chart. You see my red horizontal line, 186.75. It's beautiful here. You can see on the 3-minute chart. Beautiful. So in fact, you can see the price was above it, and final resistance. The people will call this a breakout, okay? But if they check the yearly chart, they will know that this is not a good breakout. Check the video that we call Breakout Day Trading, posted on YouTube by George Trio. That's me again. Day Pro Traders. That's me. George Trio. That's me. All right. 24 your way. That's me. So day trading, breakout day trading, check that video by George Trio. So you can see that it's a key levels, breakout takes place at the key levels. But this key level is a resistance level on a yearly chart. So price went above it, pretending to be a breakout. But here, it just stuck here, high, same high almost, and then display lower high, and then the same high again. It just stalled here, and finally, that's today. It gaps down, okay? Below the moving average 30, and this one, you will sell it after this candle is closed, this green one here. So it gap down with a bearish, and if you see this doji, one down, one up. This is a candlestick pattern. One down, one up. Do you know this candlestick pattern? Or check Steve Nielsen on YouTube. Here it is. One up, one down. On the edge of a bearish moving average 30 on the 3-minute chart. I will sell after this candle. Placing my stop loss up somewhere here. Above this candle here, that will sell. Bye-bye. Okay, so what's happening now? One can go to the hourly chart to see a better picture. So on the 3-minute chart, you see a low, a lower high, a low, and a lower low. Now it's going back above the trend, and one must watch. If one looks for opportunity to sell, watch the moving average 30 here, because the moving average 30 right now is suppressing the price. It's a kind of a dynamic resistance zone that is suppressing the price. We'll see whether the price will be suppressed here. All right, but on this 3-minute chart, because this is what the low before the last low. This, to understand the language of the price, this was the low before the last low. If in a bearish move, the price return back above the low before the last low, it's bullish. But do not forget that the moving average 30 is also a resistance here. So it's a bit tricky one here, okay, if you didn't sell it here. Now you see now, so from the yearly chart, we can switch to the lower time frame, following the trading drill, the setup, the signal, and the low risk entry point. We are using the high, the low, the opening price, the closing price, and the median line of the yearly candles. We can apply the same strategy on the weekly chart, monthly chart, all right, instead of going on to the 5-minute chart, using a stochastic like mad traders, all right, or crazy traders, okay. The next financial instrument that we're going to look at is a UnitedHealth Group. This stock, you need to be very, very careful if you are selling it. I'll give you my warning today. If you are selling this stock, be careful, all right. I will not sell it, by the way. So, but if you want to sell the stock, be very, very careful. Throughout this year, be very, very careful. But at the end of the day, what are we looking at first? The S&P 500, the market, all right? Or at least Dow 30, right? The major indices, but S&P 500, that's what we are looking at, okay? So today the strategy is very simple. Again, we'll watch the high of 2013 because that's where the market did open today. And that high, we can color it now into red. And then we will say priority to bullish signal below and priority to bearish signal. Priority to bearish signals below the red horizontal line, the high in fact for this candle. The high for this stock, UnitedHealth Group, on the yearly chart 2013, the high is at $75.88. Right, so priority to bearish signal below the 75.88 and priority to bullish signal below the 70. Am I getting tired now? All right. Somebody get me something to drink. So priority to bearish signal below 75.88 and priority to bullish signal above 75.88. That's the red horizontal line. I need to mention something very important also to traders. As long as this stock stays above the pink line here, which is the median line, almost, not exactly, which is in the zone of the median line. So in fact, I will tell you now, as long as this stock stays above 63.52, priority to bullish signal. That's what I'm saying to you. So there is a breakout here. See this candle here? It's a breakout. So will they try to retest the pink line this year before bringing it up? Though I say to you to be careful when you are selling it because, all right, this stock is bullish, all right? But then we have a breakout now of the pink line, okay? If they're going to allow, we'll see whether they're going to allow it to come and retest this level, or at least halfway here before they bring it up. That's what I say to you. It's a bullish stock. If you are selling it, be careful. UnitedHealth Group. All right? Okay? So for today, for day trading purposes, the level we are watching is the high of 2013. All right? That high 75.88. All right? That's the red horizontal line there. We're going to go now to the look for, okay, bearish patterns or bearish setups on a lower time frame and see whether we can see our red line also. We can see our red horizontal line on the 3-minute chart. I'll go directly to the 10-minute time frame. You see, that's it. Not this one, not the red vertical line. You see, that's our red horizontal line from the yearly chart. Can you believe it? Okay, it's in fact at 75.51, okay? So what's going on here? Let's analyze what's going on this 3-minute chart. So the prior was in a rising, okay, if I draw a trailer like this, channel like this on the 3-minute chart, because if it's going up, it will be in a rising channel, so I have this channel here. So the price out of a bearish channel. Now we are at the resistance level. If it's going down in another declining channel, what do? We will look for opportunity to sell. So here, one can sell here because it's out of a bearish channel, retested the red horizontal line, and now it displays a lower high here. These people selling here, they are making a right decision. Sometimes one can make a right decision and end up losing, but one will feel good because you will not be emotionally involved because you check everything carefully and you are doing the right thing. This is a sell signal here. You can see that on the 3-minute chart, as the price was rolling it down, price going down from one level to the next level. This is support level. So trader who sold it at 75.12 will take profit here at 74.60. 70. That's 42 pips, not bad, okay? For day trading, that's not too bad, okay? All right, you see how we can day trade from the yearly chart to the lower time frame, okay? Paying attention to the price itself, though I have the CCI here. We are analyzing the price because this is the price we are trading, all right? The next financial instrument that we're going to discuss is Visa. Okay, if you use credit cards, you know what is Visa, debit Visa, credit card Visa, all right? The newcomer to the Dow 30, all right? It's a newcomer. So we're going to go now to the yearly chart again, and we're going to continue this discussion about how to day trade, tips and tricks, part 2. Still waiting for the data to load it nicely here. 1 second, please. I'm going to the yearly chart. Okay, to the yearly chart, you can see that Visa stock has been bullish for 3 years in a row. And the price did open today at the closing price. And the closing price for 2013 is also near the high of 2013, which means it's a bullish stock. Bullish stock will close near the high. All right? Bearish stocks will close near the low. So this is a bullish year, was a bullish year. It closed in 2011 near the high of 2011. All right. In 2012, it closed near the high of 2012. In 2013, it closed again near the high of 2013. So what trader did in 2013, beginning of 2013, they draw horizontal line at the high of 2012, and they say priority to bullish signal above and priority to bearish signal below. Whether they are day trading or swing trading, this is the strategy that they were using, and they were rewarded. So some trader who bought it from the beginning, you see how it opened here on 2013. If you bought it and forget completely up to the end of the year, you will be rewarded in this case. This is a very bullish stock. So like now, we are at the beginning of 2014. Again, same strategy. We are watching the high. Priority to bearish signal below the level of $222.23, which is the red horizontal line, and priority to bullish signal above. Sometimes you see the candle like this, though it's bullish, some days, some weeks, some months, it went down before going up. But the yearly candle is just bullish, pure bullish, like this, okay? So from this level, for today, as the market did open, we can just carefully, okay, looking for a low-risk entry point. We're going to go to the 3-minute chart, trading around the key levels, support, resistance, trend line, market patterns, economy news, the trading triangle. Day traders, this is your powerful tools. This is how the professionals are day trading. All right? As I explained to traders before, waiting for my data to show up here. If you are working for hedge funds as a day trader, now you will be judged by your performance, yes or no, all right? So they are watching whether you are making more money or you are losing money for the hedge funds. So if you are performing like God, so to speak, all right? If you are making a lot of money, smart, making excellent decisions, not only that, if they notice, if you have a losing trade, okay, and your supervisor check the trade and know that this is a stupid decision you have made. How can you make this decision, all right? And you're saying that you're working for hedge funds. So you, at least if you're going to have a losing trade, you want to make a smart decision. That's what I'm saying. So we can see the line here on the 10-minute chart. You can see, okay? So this is today. So this is a nice signal though, you see. It's a high. No, that top. And today, it just got down. And this is nice because what the price did, it went first to touch the moving average 30 and then closed down. It's bearish. You have to sell it. This candle here, after you see the bearish pattern here, triple top at the resistance zone. So all they did, they just push it near the key level, 222.23, and then they just sold it. They hid their stop loss, somewhere here. Now they sold it and dump it. The second sellers are looking for opportunity to sell here. So you rally back to the moving average 30, they decline moving average 30, but it's a tricky machine. It went down, but it's not a bad decision. And this candle here, touch it again, sold it down. But now we are above 30. You will wait until it goes back below the moving average 30, at least if you want to sell it again on this 3-minute chart. Or we can join a line like this. Tap, okay, this point and this one, this point and this point, and we are watching this. Because we're on a 3-minute chart, nothing should, we are on a 10-minute chart now, 10-minute chart for this stock now, the Visa Incorporation stock. Okay, I'm going to the 30-minute chart. All right, so we can use the 30-minute chart. So the price was displaying higher lows, higher high, higher lows, you see. All right, but it's a very bullish stock. That's why I said you be careful for this. As you can see here, the line that I draw on the 10-minute chart, that's it. It's coming near this level here. All right. So if you want to buy it, at least go above what I would say. If you are desperate to buy, allow it to come into this zone here, between this trend line and this horizontal line here. So at least above that level. But remember, below the level of 222.23, professional are giving priority to sell signal because that's the high of 2013. Okay, in the zone of the high of 2013, not exactly the high. I can tell you the exact high or closing price on the yearly chart for Visa stock. The closing price was 222.68. All right. All right. But the high of 2013 for Visa stock is at 222.72. So the closing price and the high are almost in the same place, only 4 pips difference. And that's what's happened to them. And as you can see, from our lower time frame, we will be better off to giving priority to sell signal as soon as the market opens today, right here. You see, on the 3-minute chart, top, Q down, come back to retest here. You see the blue trend line came to retest it here. Traders sold it down. All right. The next financial instrument is Cisco. Now, do a lot of, you see, today people sell Cisco again on the edge of the red horizontal line, which is the high of last year. Now, you have to understand that this stock for long term is bullish, but they came out recently and give some warning. Now, for long term, this stock is bullish. You need to watch it because a lot of people are using Wi-Fi's, okay? So this company has a future. Talking about the future of this company. The only thing one should worry about is the competitors. If Cisco is not gaining more share, they are very market leaders, by the way, in that group of these companies. So you need to watch this stock carefully. I'm not willing to sell this stock, but the only thing forcing people to sell this stock now is the warning that they have given recently. All right, that's why they were selling it again. So here again today, they started, you see the red horizontal line. That's the closing price of 2013. Priority to bullish signal above and priority to bearish signal below. But there's another level I need to tell you now for Cisco. It's the peak line here. Be careful. As long as this stock remains above the level of $20.67, you must note it down. This is the root smart median line for Cisco. The root smart median line is the first smart median line, okay, at the beginning of a new year. So, all right, this is not the exact root median line, but this is near, it's okay, almost, okay, because I need to use my formula to calculate that. If you want to know more about what is the root smart median line, what is the smart median line, what are the 6 critical price level, check on Google, trading a critical price level. You'll see an article written by myself, trading critical price level at www.articlebase.com. Now, so the Roots Manager line is also a powerful trading tool that we pay attention to at the beginning of the year, apart from the opening and the closing, okay, of the yearly candle, the previous yearly candle. The 6 critical price level allows traders, day traders, swing traders, investors to make excellent decisions. So for Cisco, talking about investment, talking about day trading, talking about swing trading, as long as the price above the level of 2067, for long-term views, one should give priority to buy signal. I repeat, for long-term views, one must give priority to bullish signal unless Cisco come up again and with another warning that will push the price down. Do not forget that as a trader or investor, you must be flexible and flow with the market instead of trying to force the market. All right? So for today, the level we are watching is the closing price of 2013, which is right here in the zone of $22.45. Priority to bearish signal below, priority to bullish signal above. But there's another level here, 2067, which is the Roots Manager line that we must watch. So if you go back now, today they sold it, okay? Let's see whether we can see our red. You see here? Okay, today, the gap down. From the level of $22.45, the price now in the zone of $22, almost Cisco has lost 45 pips today because of, you see, couldn't go above, okay? Instead of gapping up above, which means the sentiment is bearish, it gapped down from a key resistance level. In fact, this key resistance level is a psychological price level because priority to bullish signal above it and priority to bearish signal below, and it gapped down. And you see, form a lower high after a gap down. If the price gaps down and form a lower high, you will sell. The price gaps up and display the first higher low, you will buy. Here, trader will buy, will sell. Lower high, see? You will wait patiently. Okay, don't force it, okay? Tiny risk, put it here, it's here, it worked nicely. Now they are taking profit, all right? That's why it's going like this. This is not a good start for Cisco, but we will see how the market will respond, okay? So the first week, as I explained to trader, the first week of the month of the year is very, very important. Watch the first week, watch the first quarter of the year, watch the first month of the year. So up to the end of March, we will know what is likely to happen to many stocks, as we use also, for those who understand the area wave, the first area wave to forecast the motive wave. That's how we know what is likely to happen for a stock within the first month, within the first quarter, within the first week of the year, all right? So up to the end of March, we'll be able to forecast many stocks and know what is likely to take place. Next, financial instrument. This time we go again to the yearly chart. The stock we are looking at, Goldman Sachs. Again, the same strategy, the high priority to bullish signal above the red horizontal line, which is the closing price of 2013. It has been bullish. You see, this is a double bottom pattern here. Bullish, okay, in 2012, bullish 2013. We will see if it must go above the red horizontal line before we can be bullish. If it stays below the high of 2013, we must be bearish until we reach the median line of 2013. We can also use the 6 critical price level to determine, okay, the key levels. Professionals are always trading around key levels. Professional investors are always investing around key levels. You see? And they know the high, the close, the opening of this Goldman Sachs. So this is it for today. Let's go to watch the red horizontal line. I'm going to go now to the 3-minute chart, the setup, the signal, and the low risk entry point. So this is today. You see here, January 2nd, 2014. Goldman Sachs right here. And as you can see, display a double top. It's beautiful, isn't it? It's beautiful. A double top. Not only that, and a lower high. It's going down. That's why it's happening. That's why it's the better place to sell is this one here. A double top and a lower high. Probably find a resistance. You will sell. You don't need any more permission. You will sell it straight away. All right. Hiding your stop loss behind. Okay. That's what's happening here. And this is not happening on a 3-minute chart alone. Why people are selling here? They know that it should be bullish. If it's going to be bullish, it must display a new high above the red line. Just the language of the price, following the price itself. They understood that. But now, why is it coming down and displaying a double top and then followed by a lower high? That's where professionals are busy, okay, selling Goldman Sachs. But be careful. This is the first day of, it can be a profit taking. This is the first day since the market did close for the holiday. So do not assume anything. And it's just the first week, okay? It can be profit taking. So now it did below that neckline here. You see the projection of the triangle, you see here? Projected down. The bearish momentum continues for this Goldman Sachs. All right, be careful, don't sell Goldman Sachs. They are market participants, all right? Be careful. These are stocks you don't want to sell and forget, okay? Be careful, all right? Now, okay? You don't sell the JPMorgan and Goldman Sachs anyhow. Be careful. If you trade in these stocks, these are market participants, and these are leading market participants. Now, that's my own view, all right? I'm not saying people cannot sell, but don't get into that fight, okay? Okay, so you see the projection. So this is a good decision. Traders sold it. They have a good reason to sell it, technically speaking. And you see, bring it, if it's going down more, you see the target they are watching, which is bringing us here to this level here. All right? So you see now, this is another stock, Exxon Mobil. Again, we go to the yearly charts. Why this video is so important? It's to allow traders to avoid day trading mistakes. So they can also understand how professional day trading, the market first, before the individual financial instrument. So they are watching first the market, and then if the market bullish, is the market, okay, bearish. Okay, now they're watching the sector. Is the sector itself bullish? So sometimes, if the market is bearish, but the sector is bullish, you can get away with it by buying, though the market itself is bearish, because the sector at least is bullish. Though the market is bearish, the sector at least bullish. You can trade stocks that are bullish in that sector. Okay? But in order to avoid a fight in the market when we are day trading, we should always align our day trading strategy with the market itself. All right? All right? So here again, for this stock, Exxon Mobil, we'll pay attention to the high of 2013. That's why it did close. This is a small breakout comparing to this horizontal line here, in the zone of $96.65. Price break above $96.65. Now we will see whether it's going to retest that level, $96.65. You need to watch that level carefully. $96.65, watch it. Watch that level. Or round it to $97, watch that level. If you find a resistance that is coming down, watch the zone around $97. You see, but, okay, Exxon Mobil. But if it goes below the level of 97s and find a resistance there, well, it may go down for a while, okay? But as I said to you, the market, the sector, before the individual financial instrument. Economy news relating to Exxon Mobil or the crude oil, or to Iran, because Iran, the crude oil was going up because there were sanctions, economic sanctions against Iran. Now, there was some agreement recently that will allow Iran to come back into the crude oil market, which means we'll have more crude oil, more supplies, putting more bearish pressure on crude oil. So the crude oil is any financial instrument is governed by the law of supply and demand. So if you have more supplies than demand, okay, the price will go down. But if you have more demand, people want to buy more, but we have less supply or less provision, the price, okay, will go up. So now that before the supply was low, we have now Iran, which can also supply to the market. We have a bit of increase in the supply. The demand, okay, almost the same. With so crude oil may suffer a little bit. If crude oil is going down, Mobil will reflect that. Okay, it's a market leader. Mobil is a market leader for a Dow 30 index. If you want to know more about market leader, you need to go to www.dayprotrader.com, click on Market Watch. So for today, for day trading purposes, the red horizontal line is at $101.68, $101.68. Probably to bearish signal below, by another level here that we must watch around $97.00. All right, so you're holding it down. Okay, but if you dip below the 97.00 level, be careful, it can go down more. All right, okay, you see now, I don't want to remove my lines here, I need them. So I'm going to go now, pay attention to the red line, go to the 3-minute chart, a lower time frame, to see what has happened today around that key level. Can we see the red line? No, it's not here. I'm going to the 15-minute chart this time, and this is it, you see? Nice. So we can see it from the yearly chart. Can you believe it? We can see. So we don't want to trade in a void. That's what I say to TSTW24 traders. Do not take the signals in a void. Look for a setup. Okay, use a multiple time trading approach to enter the market. So in fact today, which is the 2nd of January 2014, the market did open today. The price tried to go and retest the red line. But that in fact was before, on the 31st of December 2013, the market did close trying to retest it. In fact, they sold it that day at the last minute when the market is about to close. Trader recognized this setup as a bearish. Aggressive seller placed order to sell. As the market opened today on the 2nd of January, the price gaps down. It went down fast to this level. It quickly come down with another inverted hammer like this, followed by, you see, this candle here is a typical candlestick part of these two here. Can you see it? Inverted hammer and a bearish candle. These two, you will sell. It's a bit tricky though, because the market can be a bit wild, so you need to be careful, all right? This kind of trade can be messy. If you couldn't get into it somewhere here, which is very low risk entry point. For day trading, is the risk that is our number one in the enemy. You want to control the risk, the low risk entry point. All right, here, this will be a better place. But here, it worked out nicely. They should sell it below the 10168. From the higher time frame to the lower time frame, trading on the edge, paying attention to the support and resistance level, watching the channels. JPMorgan is the next financial instrument that we're going to look at. We're going to go again to the yearly chart, discussing how to day trade, tips and tricks, part 2. All right? Okay, moment please. So this is JPMorgan again, the same strategy. Market did open today. Was opening near the closing price of 2013. A new financial year has begun today, and the market has opened for the first time in 2014. Decisions are made around key levels. Professional will note down all these key levels. You understand what I said? If you are day trading, trade like a hedge fund day traders. All right? Because they are under pressure to perform consistently, all right? or trade like the best algorithms out there, okay? Okay, the artificial intelligence, all right? Or the phantom computerized traders, okay? So we are watching the orange line this time, not the red line, orange line. Priority to bullish signal above, priority to bearish signal below. You can see that I draw another line here, which is the black horizontal line, the first one. So if he goes above the orange line, then find a support, we must watch the black horizontal line. That will be our first target. If he goes above this, the first black horizontal line, we will watch the second black horizontal line. See the high of this candle here and the high of this candle here. So these are key levels that professionals are watching. So the first one is this, the orange line here, and from that point onwards, you see. So if you're going to buy at a resistance level, it's very simple. The price must find a support above that resistance level. Otherwise, we will not buy at all. Okay? If you're going to sell at a support level, the price must go below the support level and must convert that support level into resistance level. Otherwise, the support is still in place until it's converted into a resistance level. It's a very powerful day trading method. One can apply the same strategy on a daily chart, weekly chart, monthly chart, okay, as I'm doing here on the yearly chart. Taking excellent, beautiful day trades. Send me, okay, some emails, contact me. If you take some beautiful trade, let me know. I will be happy to see them, all right, and rejoice together with you, okay? I'm going now to the 3-minute chart. Can you believe it? Look today. This is today. Look what's happened, okay? So before, this is on the 3-minute chart. There was these highs here. Price was finding a resistance. Because professionals know that there's a leads level here. They are watching it. So this is before today. And then today, look what's happened. So on the 31st, this is beautiful. Sometime 10 minutes before the market close, especially on the 31st of December each year, you can place some day trade and leave them there carefully until the market open on the 2nd. You can do that every year, you see here. So on the 31st, the market did close near the orange line. See here? In fact, you see, it closed, but then you see this on the 3-minute chart with all this candle here. Traders sold this stock, JPMorgan, on the 31st, last minute, the 10 minutes before the market closed, they sold JPMorgan. And they went on holiday. Today they come in to take their profits. So price gaps down. You see, these are profit takers. This move here, you see here. You see this will be a low volume, you see. The move from here, the rally up to the edge of the bearish, moving over 30. These are profit takers. So we'll see a lot of volume and then followed by, okay, low volume in this session as the price was rallying. There was another invitation to sell on the edge, beautiful signal here, on the edge of the moving of the 30. They sold it now, okay? So now what's happening? You see the gap, there's a gap here. Whenever you see the gap like this, higher like the top, roughly, okay? I'm doing it roughly here. This is another strategy by Mr. Steve Nissen, the candlestick man. All right. So measure it. I'm doing it roughly, okay? And put a line to the medial line of the gap. You see, that's where we are. This is the gap here. This is the middle point of the gap here on this 3-minute chart. And watch it. This is where the price stopping today. Professional know it, you see. Gaps down today. It went to the middle of this gap here. Very interesting, isn't it? The price is always, though it looks messy, all right, it's always going from A to B. Always. From one key level to the next key level. From one essential price level to the next essential price level. Always. So you see? No one wants to force to sell here until they below it and retest and find a resistance and continue. So they are waiting now because they know that this level is here. The median line of this small gap here. So from the yearly chart, we can make excellent decisions like this, okay? Gap down and display a lower high. If it gaps down and display a lower high after that, you will look for opportunity to sell. If it gaps up and display the first higher low on the lower time frame, on the entry time frame, you look for opportunity to buy, taking a tiny risk. There's no long discussion about gap trading. I've seen some video about gap trading and I get confused. I will be recording videos about gap trading. I haven't done it for some time. So it's another area we need to rectify a few things and share our experience with other traders, okay? Okay? So from the yearly chart to the 3-minute chart to the lower time frame to the entry time frame, paying attention to the price itself, the number one indicator, analyzing what is taking place. Only 2 stocks more left. We're going to go again to the yearly chart. If you like this video, like it. If you don't like it, dislike it. Have any comment, put below. Don't watch the video and go away. So if sometimes I watch a video, now I walk away because I didn't want to mark it down, especially if I notice that the person is a new person or the person is new on YouTube. So I don't mark them down because I want to encourage them. So I don't want to mark them down. I walk away, okay? I do that. But sometimes I mark video up on YouTube to encourage these YouTubers. It's part of the community, all right? Do it to encourage people. Or sometimes I see videos that are excellent and some people mark them down. I will mark them up straight away because sometimes we notice that some of the competitors on YouTube also will send people around to mark video down or themselves they'll go and mark them down though the video is still excellent. Don't do things like that. I don't believe in competition or negative competition. I believe in innovation. Don't mark people down because they are your competitors. If they create excellent video, mark them up, full stop. If you don't want to mark them up, okay, walk away instead. But sometimes I see videos that people mark down, but the video is excellent. Then I mark them up, all right? Okay, so the strategy we're going to apply, this is to breathe in and breathe out a little bit. That's why we are talking about YouTube and marking videos. All right, so now again, the price did open near the closing price of 2013 for this United Technology, the stock that we mentioned last year. Did you forget? Okay, talking about financial static way. Okay, all right, and a Dow root indicator. Have you watched the video, Dow root indicator 2013? I will be recording a new video this year that we will call Dow root indicator 2014. We will highlight for traders stocks that have a high chance to break out, all right, using the financial static way. When a stock has the same root, a small median line for 3 consecutive years, all right, the financial static way is equal to 3. Stock that have financial static way equal to 3 has a high chance to break out. We have demonstrated this many times, how this is so powerful. So in 2012, we have started recording this video about the Dow root indicator 2012. You can check it on our website, www.stochasticmarket.com. Click on proprietary trading, and you watch the video, Dow root indicator 2012, Dow root indicator 2013. And this year we record again Dow root indicator 2014. Check the stocks that we have said that they will break out. They all break out, all right? Not too bad, isn't it? Powerful. This is our own proprietary trading tools, apart from the 6 critical price level. We'll also use what we call the financial static way. So here we are, UTS. Check United Technology when you are checking the Dow root and see what we have said about this. Tall bullish candle. So for today, we will be watching a green horizontal line, prior to bearish signal below, and prior to bullish signal above. This is very important for the whole year, for swing trading and for investment. If you stay below this green line, we give priority to sell signal. Doesn't mean we go and sell, but if we see a valid sell signal, we'll take it below that level. Trading within a declining channel. If it's going down, one must watch the median line of 2013, the median line of this candle here. That's a psychological price level. It's the 50% Fibonacci retracement level of the range of this candle here. Though we say priority to bearish signal below the green horizontal line, one must remember also the median line of 2013. You can see that the stock was bullish first, that's what we call diagonal move, vertical move. How far is going to go more? We will see. If it goes above the green line, it will continue to move to the upside. But if it goes up vertical for a while, what's going to happen? Retracement to the opposite diagonal. Diagonal move, vertical move, retracement to the opposite diagonal. As always, one should not use the technical alone. One must combine the technical and the fundamental. So for today, we'll go again to the 3-minute chart. All right. And we are looking for the green horizontal line on the 3-minute chart. We can't see here. I'm going to go straight away to the 15-minute chart, a very crowded time frame. This is my green horizontal line. You see the green horizontal line at $114.10. So today the market did open here on the 50-minute chart and it gaps down. So why the stock did gaps down? Why some people were selling before? Let's join the top of. Now I'm going to join this one. Join this one. Okay, join this one. Okay, let's extend this one. It looks like this one that we are watching. See this? I'm joining this point and this point on my 15-minute chart, not 3-minute chart, 15-minute chart. I won't color into green. Okay, color it into orange. See, joining this point and this point allow me to draw my orange line. So, in fact, the price still in a rising channel. I draw a line roughly like this to be parallel to the orange one. So we can color this one again into orange here. You see that the price was on the upper end of this orange channel on the edge and also near the green horizontal line. And some traders sold it on the 31st of December 2013. And as the market did open today on the 2nd of January 2014, the price gaps down below the moving average 30. Yes, they have a reason to look for opportunity to sell below the green horizontal line. Now it's below the moving average 30. We want a rally near. Okay, so we will prefer it to push it up to the moving average 30 and to convert the moving average 30 into resistance. But it couldn't even go there. This will be a better place. So if you are selling here, you know that why they not bringing it here? We would prefer to sell here. In that case, depending on your risk tolerance, if you can afford it for day trading purposes, we don't want to risk too much pips. So I will be. So what you should do? What the horizontal resistance? So see this resistance here, the black horizontal line. So because you see, in fact, it just stopped here. So it's to give it a chance like this. You see, so green candle followed by the bearish candle. Another doji here is looking bearish. So you'll be very patient analyzing each candle here. After this third one here, the doji and the bearish candle. It's a candlestick pattern. You see, one bearish, a doji, and a bearish candlestick pattern. You will sell it, and then you just place your stop loss above here carefully, and you will keep your eyes wide open watching it. Price going down, you will watch the first and nearest support level on the entry time frame, in this case 10-minute chart. So you will enter after the closing price of this candle at the level of 112.83. All right, 112.83, and you will take your profit somewhere in this level, 160, 112.60, 20 pips. It's not bad, isn't it? All right, you want to be careful as a day trader. If you are a greedy day trader, You move your stop loss to break even and allow it to run. So if the music has changed, they take you out, you close the trade, they will close the trade at zero loss by moving your stop loss to break even as soon as you are in profits to control and manage the trade. See the green horizontal line, you see, prior to bear signal below, okay? Here we are, this is another stock. You can see the red horizontal line. This is from the yearly chart, how the price today was, see here. So in this scenario, this was the previous high before the latest highest high. So if the price return back below, if the price display a new higher high, but quickly change direction and return back below the previous high, it's a bearish. We will look for opportunity to sell. Now you can see this was not it's a bit messy here. All right, it looks like a double top. It went up, pulled back, and with this green candle, followed by a bearish. Traders force it down. It's not easy because some traders were selling above the moving average 30. But we know that some traders would like also to buy near the moving average 30, which make it a bit tricky. So it's better to look to sell below the moving average 30. All right, this was not easy. It was not easy. It was a bit risky here. I'll show you the bigger picture on the yearly chart. So you see on the yearly chart, this is American Express. If you like credit cards, American Express, if you have been busy using your credit card this Christmas, all right, personally, I don't, okay, use credit cards anymore, all right. But credit cards are useful for people who know how to manage money and control themselves. It's very useful. But if you don't control, you spend, you are addicted to spending, okay, you can get into trouble. That's all I can say, all right? So this American Express, and the strategy is very simple. The high price did open near the high of 2013, okay? A new financial year has begun. We are watching the high of the previous year because the price has closed near the high of the previous year. Now, only other thing I need to mention here, there was another stock before that I need to mention that. You can see that the price break above the neckline of this V pattern for traders that want to swing trade or investors that are buying the stock. Attention please. Though this is for day trading purposes, I need to mention this to traders very quickly. There was a V pattern here, and the price breaks above the neckline, which is the horizontal line here. Professional will project it to the upside. So there are more to come. The stock did not reach the target level, which is somewhere up there. Okay? So there is a high chance that the price will return back above the green line, the red horizontal line. If it finds support, there is a high chance the price will return above the red horizontal line because the stock did not yet reach each target zone. So if you are selling it below the red horizontal line, which is at $90.84, be careful because the price did not reach each final target zone. It may pull back, maybe you will pull back to the median line of 2013, and then you will find a support and zoom in up to reach the target level. But right now, for day trading purposes, as I show you already on the 15-minute chart, yes, traders were right to sell it today because it was below the red horizontal line, $90.84, prior to bearish signal and prior to bullish signal. But remember the warning that I have just mentioned to you. We have covered 12 stocks so far, talking about how to day trade, tips and tricks, part 2. I'm going to check quickly how long we have been talking now. There's one stock I want to mention something about it. This is UnitedHealth Group, all right? I want to show you something on the yearly chart very fast because we also have We are talking now an hour, 14 minutes. Okay, that was not my intention. What is UnitedHealth also on the yearly chart? As I show you now for American Express, for the UnitedHealth Group, on the yearly chart, we have the same scenario, which is the V pattern on the yearly chart. Again, here you see the price formed, okay, from the yearly chart. We can see beautiful setup, and we can use that for swing trading, okay, or position trading or investment purposes. This will allow us to understand what professionals are trying to do. Apart from the chart pattern, we have also what we call the Elliott wave patterns, all right? Which means a flat correction can go above the previous high, like this. Trader will think that it's a V pattern, but the price will find a resistance here and just come back down in 5 waves. The flat correction is formed of 1, 2, 3, so the price goes down 1, 2, 3, 1, 2, 3, and then we go to the level of a 138% Fibonacci extension level of the move from here to here, the Fibonacci extension of the move from here to here, probably go above the previous high up to the zone of 138% Fibonacci extension zone, completing, okay, the B wave of the flat correction wave, 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5. So some traders that are using the chart pattern will say that this is a V pattern, but if the market is just a corrective wave, a flat corrective wave, the price will not go to the target level. Remember that also for American Express. If it is a flat correction, the price will not go to the V pattern target zone, but will find a resistance around the zone of 138% Fibonacci extension zone above the previous high. This is the end of this video about how to day trade, tips and tips part 2. I hope you have gained a lot from this video to improve your day trading and make excellent decisions. Until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders. Speak to you soon. Happy New Year to you all.